All right, welcome everyone. Welcome back to the channel. I believe this is episode 20 of my Robinhood portfolio. And the reason why I'm doing these videos so close together is that at least for this particular video, I just wanted to show that I do get red days, and today was not a good day, unfortunately. Minus $32, and the after hours aren't looking too bad either. Minus $3. So overall, the day could have been better, but I do get red days, and for some reason, I don't show enough red days. I'm always showing my green days and my gains, but I wanted to show that I do lose money, and today I lost money. So sometimes the market gets that way, and it's kind of funny how the markets are, posting these all-time highs. I think the S&P reached an all-time high today, and we're officially in the longest bull run ever. But it's not been a good week for me. I'm still up 2% for the week, and I'm still up 4%. So great gains, but I'm starting to trend back here. I'm starting to give back some of those gains. And for the year, I am up $1,200. So it's only a 9%. I will take that 9% any day of the week. I look at the market as for me at least, I always say that if you're up 10% on the market, that you are beating the market and you are having stellar returns. So at one point this portfolio was up about I think almost 11%, and I felt really good because, like I said, if you're up over 10%, I like to see that as you beating the market. So currently, right now, I'm not beating the market, but I'm still up $1,200, which is still phenomenal to me. I still like all my gains and all my moves, but I'm going to go ahead and quickly talk about my portfolio. I'm not going to just dally around here. So there have been, I think, not too many changes, but there have been a couple. The new stock in my portfolio is Costco. I don't think this has surprised anybody, even though I talked about Walmart a lot and I loved Walmart. The only reason why Costco is here right now is because Walmart hit my stop loss. I have stop losses on my stocks, and again, we're in the longest bull market ever, and I think I've said it in a previous video that I'm not a stranger to taking the money. I am not scared of taking the money. I am not scared to sell my stocks. I sell high and I buy low. It's a fundamental investment strategy that I think everybody's aware of. And when the stocks get high, I like to sell off. But there are particularly some stocks that I really like to hold for the long term. And stocks like Apple and Johnson & Johnson and Procter & Gamble, those nice dividend blue chip stocks. With that being said, I had to sacrifice a couple of stocks just to buy all these Costco shares, because Costco, it might be a little bit overvalued to some, but I don't know, guys. So this shouldn't surprise anybody. I've talked about Costco before. I like them a lot. They're kind of like Netflix in a way, that they basically gain their revenue off their subscription growth, like membership growth, and people look at that a lot with Costco. They don't generally look at market sales. They want to see how many people are signing up for those memberships. So with that being said, what makes this stock different from Netflix is that they're a retailer, so they sell just about anything and everything in these warehouses. And I'm no stranger to Costco. I shop at Costco. I love Costco's pizza. I love their hot dog. I think it's $1.50. You get a soda with it. It's just phenomenal. It's a phenomenal company, and I think this is the reason why this thing has just been an absolute killer run. 14% for the last 3 months, and up 3% last month. So, it's a great stock. It's a great grower. It's a great stock that's increasing that dividend over time. I think it's around 5%. I don't think that's accurate, but still a good dividend. It's not a bad dividend by any means. Blue chip stock, definitely $100 billion market cap. PE ratio a bit high, but that's okay because I just think that Costco is a grower. They are a nice grower and a nice addition to my portfolio. So, Walmart, it hit my stop loss of about $96. And like I said, I'm not scared of taking the money and moving that money elsewhere. With that being said, I did see a weakness with my portfolio. Once that stop loss kicked in, I didn't have a retail stock. And I said it before that I was really bullish about these e-commerce stocks that Alibaba, Amazon. I've proven that I've been in and out of Amazon a lot, but I was looking at Alibaba, and they have an earnings report coming up, and I was getting ready to buy them. I was getting ready to buy a Chinese stock called Alibaba, ticker symbol BABA, I think. But they have an earnings report coming up, and I just thought that was risky. So I ended up buying Costco. I'm not really sure when their earnings report is coming up. I don't even think they show when their earnings report is coming up, but that's okay. I like Costco a lot. I'm familiar with them. I shop there pretty much every day, and my whole family loves Costco. Like, we all have memberships where we can just go into these warehouses, and they have a great products inside these warehouses. They're really, really good at knowing how to market their brand and make money. So Costco is now in my portfolio. I had to sacrifice Microsoft, sadly, to buy some more Costco shares because it's so expensive, and that really hurt because I really like Microsoft a lot. They were growing. They've been kind of stagnant lately, but I just think that Microsoft is a good company. They don't dip much. Look at that graph. That graph is insane, up to 248%. And they have been going down. They have been trending back down, and I just thought I could move that money elsewhere. I'm not scared to sell my stocks if I see weakness. And the thing with Microsoft is that I knew when I bought Microsoft it was a little bit overvalued. Like this, when I first started investing, Microsoft was one of my first stocks that I bought, and that thing was like around $68. So it was maybe lower than that. It's $68, maybe even lower than that. So now the stock is almost $109 or something like that, $105, and even though they grow, again, I look at stocks and I buy low and I sell it high. It's a fundamental investment strategy, and that I like to do. Sometimes I don't follow my own advice, but I ended up selling Microsoft. It hurt a little bit, but listen, guys, it doesn't hurt at all to sit on cash. And right now the markets are high. Right now, when I look at my Seeking Alpha portfolio, and I'm just looking at evaluating all these stocks, I don't see nothing that I like. I don't see nothing that excites me to just jump in and say, oh, okay, this is what I want. The only reason why I bought Costco was because I need a retail stock, or either a retail or an e-commerce stock. And I was really close to buying Alibaba because they have been on just a terrible dip as of late. And I think they were down almost 15%. But I ended up buying Costco. But listen, sitting on cash gives you many, many advantages. When stocks go on sale, you're ready to instantly buy a ton of shares for one of your favorite stocks that are on sale. And the thing about sitting on cash is that if you need that extra money to pull that money out of portfolio to buy, like, I don't know, a camera or a computer or a laptop or something like that, you can do that. Now, I don't recommend pulling money out of your portfolio because, again, when you put money into your portfolio, you want it to grow a certain amount. But the thing is that for me, at least, I want this portfolio to I want my portfolio to start sitting on cash. I want my portfolio to start sitting on at least 20% cash, so that way when a stock goes on sale that I like, I can buy a lot of shares of. And that's how I got a lot of shares of these other stocks like, Apple and, Johnson & Johnson. I had the money to buy a whole bunch of Johnson & Johnson shares, and look, I'm almost up $149. And not to mention, they pay a great dividend that go along with that $149. So it's two-way. It's a two-way strategy that you can do a lot when you're sitting on a bunch of cash. And, when I looked at Microsoft, I just said to myself, even though that I had almost $1,000 in Microsoft, but I had bought it high and they were starting to, trend back, and I needed some extra money for Costco. I ended up selling Microsoft. I bought some Costco shares. I increased my Verizon shares because I do like Verizon a lot. And even though Verizon is starting to become a little bit, I would say iffy for me because I like buying when it's around $50. I do want to accumulate like 100, and not even 100 shares. I would say around maybe 50 shares of Verizon. They pay a really, really good dividend. Like, this thing is really good at paying dividends, and, a $25 dividend, I'll take that any day. But, so now we're down to 9 stocks. We're down to 9 stocks, and we're sitting on I think I have about $1,000 of cash just sitting there. So, when I was looking at Alibaba, and they have an earnings report coming up, and if Alibaba dips, I might jump in. I'm not sure yet. I'm not 100% sure what I'm going to do, but still, solid portfolio. It's still a solid portfolio. Tech, health, utilities, consumer staples, telecom, discretionary services, industrials, banks, financials, and we have retail discretionary. So still hitting a lot of markets. Again, some people might say, hey, put an oil stock in there. That way you'll have 10 stocks. And you'll be super diversified. I mean, even with 10 stocks, I'm pretty much hitting every sector, which is great. I just love the fact that I can diversify so much with so little. But with that being said, I don't like oil stocks a lot. Like I said, I think I said this in the other video. I just think that they're extremely volatile, and most oil stocks pay good dividends, but I'm just waiting on like a mega correction with these oil stocks. I still think that the time to buy oil stocks was the last correction, like around 2015 or 2016ish, when they were massively getting hit. And I think even Shell was like $30. I'm like, wow, that's a steal. So that's what I'm pretty much waiting on. Apple is still the biggest position in my portfolio by far. They have kind of been trending back here. A lot of people are starting to take profits, but that's okay because if they start taking profits, I'm just going to buy more of it. So again, guys, like I said, sitting on cash advantages. Don't be scared to take the money, sit on some cash, and just wait because you have so much leeway, you have so much financial freedom when you're sitting on like $1,000 and your favorite stock goes on sale, because then you can buy a lot of shares of it, and you can ride that thing right back on up. And that's pretty much what I've done with this portfolio so far, and it's been a great strategy for me because I'm up $1,200. But yeah, guys, just comment, rate. This is a quick video because I'm down to 9 stocks, but I'm still extremely diversified. I do see a little bit of weaknesses, but they're not too bothersome, I would say. But yeah, just comment, rate, whatever, and I'll see you next time.